Hello and welcome to Business Daily on Trust Television. On this program, Money Matters That Matter is what we discuss on the Nigerian economy. I am your host, Christiana Amodu Otinya. Thank you for joining in. First, let's take you through the headlines. Debt relief initiative, World Bank says financially distressed economy may have to wait a little longer. Pipeline security, NNPC PTI to deploy anti-theft systems on pipeline. Now I'll bring you more details on that in the business roundup. However, let's take this short breather. When we come back, time for stock market updates. Please stay. Welcome back and thank you for still staying with us. Now let's look at the equities market segment and tell you what's happening with bourses around the world. We'll begin from Customs Street in Nigeria, talking about the Nigeria exchange. Now profit-taking activity happened on the exchange and we saw the exchange closing marginally lower, 0.02% to end at 47,524.38. Now investors staked a total volume of 86.55 million shares valued at 2.09 billion naira in 3,265 deals on the floor of the local bourse. Equity caps ended at 25.88 trillion in Nigeria. Now we saw profit-taking activities on the share of Geregu Power and some other shares, and that affected what we are seeing in the stock market in Nigeria. Let's move over to other bourses in Africa. We begin from Africa's largest securities exchange. That's talking about the JSE in Johannesburg, up 1.71% there to end at 58,950, while the GSE in Ghana is up marginally there, also 0.02% at 2,462. Now moving to global markets. Now the focus for global markets largely is on what's happening with US inflation, and we saw the US CPI numbers come out. Now going on to US markets, stock futures opened higher as investors turned their attention to big bank earnings after the major averages staged a historic turnaround rally. The Dow Jones Industrial Average is up 2.83% at 30,038.72. The S&P 500 climbed 2.60%, 3,699.91, and the tech-heavy Nasdaq Composite there 2.23% at 10,649. So the market has rebounded back into green territory, and the focus is on CPI data. But now we are seeing that investors are shrugging off some of those concerns and moving now into the earnings seasons. What is the health of companies listed on these exchanges? Like, that's what investors are focusing on now. Moving on to Europe. European markets also surged, and we're seeing a sea of green for these markets. The FTSE 100 in the UK 1.42% higher, the CAC 40 in France 1.12% higher, and the German DAX climbed 1.75% there at 12,572.33. So CPI concerns, of course, lingering around the corner. The investors are looking forward to what the Fed Chair, Jerome Powell, will also say how the Federal Reserve, the U.S. Federal Reserve that is, will react to these inflation numbers. Central banks around the world have focused on reining inflation, and we have seen rate hikes coming in from every corner. Over to the Asia-Pacific region now. The stocks in Asia, they took a lead from Wall Street. Now we're seeing the Nikkei 225 climbing 3.25% at 27,090.76. In mainland China, the Shanghai Composite also in positive territory, 1.84% at 3,071.99. And the Kospi in South Korea up 2.30% there at 2,212.55, as you can see on the chart. So the sea of green is entering also into the Asian straits. Markets are focusing, of course, on the CPI from the US. It is normally said that when the US coughs, the world catches cold. So when we have policy decisions or big data come out from the United States, we'll see how that also affects other bourses around the world. Going over to commodity prices now. What are the prices like today? We'll begin from the international benchmark for crude oil. That's Brent crude, $94.39 per barrel, down 0.19%. For the metal industry, talking about gold, gold is trading at $1,664.48 per ounce. Also in the red zone. So we have the Brent and the gold staying bearish from the red arrows you can see right there on your screen. Remember, gold is considered as a hedge against inflation and also a safe haven for investors. For silver, $18.90, climbing 0.20%. For agro commodities, palm oil is up 2.89% there at $2,385 per metric ton. Wheat is doing $3,883 per metric ton, up a whooping 5.95%. And for cocoa is doing $895.52 per metric ton, up 0.42%. So we have seen the agri-commodities stay largely bullish for some time now, and that is also affecting the markets, and investors are of course also watching that development. Now let's go over to the crypto watch. What's happening with Bitcoin? Bitcoin is trading at $19,653, up 1.49%. Ethereum, $1,321.30, up 2.68%. And for Binance, $273.08, up 0.81%. Of course, analysts have said if you must invest in the crypto market, it is essential that you understand what you are investing in. I have my guest with me already in the studio. He is Professor Uche Uwaleke, Professor of Finance and Capital Market. I know, Prof, you monitor these developments in the stock market. Now, I want you to react to some of the greens and the reds that we have seen in the capital market. Let's begin from Custom Street in Nigeria quickly before we take a short break.
The equities market in Nigeria, I would say experiencing headwinds, macroeconomic headwinds. So a reflection of these headwinds, a reflection of the fact that inflation rate is on the rise, a reflection of the fact that economic growth is still weak, and also a reflection of the fact that the central bank has changed stance to a hawkish one. So the tightening of monetary policy is also affecting the performance in the equity segment, and that's because that tightening has led to increase in yields in the fixed income. So what you find happening in the equity segment is simply a case of rebalancing that is going on, rebalancing from equities to fixed income.
Okay, okay. Prof, you give us more on that during the conversation segment, but let's quickly take the business roundup, and we'll begin from the front of one of the Bretton Woods institutions, that's talking about the World Bank. The president of the World Bank, David Malpass, has said financially troubled nations seeking for debt relief may have to wait a little longer because there is currently no strategy in place for doing this, as most of the world is already experiencing a severe economic crisis. According to him, nearly half of the World Bank's commitment have been made to Africa thus far. This represents a gradual shift in the organization's commitments towards fragile nations, particularly the continents prone to distress, which needs to start looking for solutions to its structural and fiscal bottlenecks. As the world struggles with high inflation, high debt, rising interest rates, and increased uncertainty, quite a few low-income and developing countries, including Nigeria, have been subtly pleading for an outright cancellation of their mounting debt, or at least a restructuring. Now, going over to the oil and gas sector, Nigerian National Petroleum Company Limited and the Petroleum Training Institute will deploy integrated anti-theft monitoring system on pipelines. Chief Executive Officer of the Petroleum Training Institute, Henry Ademola, says that he had created an integrated oil anti-theft monitoring system to efficiently monitor pipelines. The Group Chief Executive Officer of the NNPC, Malmere Kari, says that the NNPC would work with the Institute to deploy the technology to further boost the monitoring of NNPC pipelines in order to address crude oil theft in the country. That's so much we can take for the Business Roundup segment. We'll take a short break, and when we return, time to kickstart the conversation for today. Please stay.
TV, documenting the Nigerian story.
Welcome back and thank you for still staying there with us. This is still Business Daily, where we talk about business, finance and investment and the Nigerian economy in its entirety. Now it's time to kickstart the conversation of today, and today we'll be focusing on the projections that have come out from Washington, D.C., talking about the annual meetings of the International Monetary Fund, the IMF, and the World Bank. That meeting is ongoing currently at the headquarters in Washington, and we have seen a lot of projections come out for the global economy and also for emerging markets and Nigeria, sub-Saharan Africa. Now we put together some data on that projections, on some of the reports, the global economic outlook we've seen come out from the IMF. What the IMF is basically saying about the Nigerian economic environment. Now the IMF says Nigeria's economy is to grow by 3.2% in the year 2022. It downgraded sub-Saharan African economic growth to 3.6%. Also downgraded due to tighter financial and monetary conditions. Global growth is to slow to 3.6% in 2022 and the year 2023. Incidents of flooding in some states in Nigeria to worsen food insecurity and further increase food inflation. Nigeria's inflation rate is to moderate to 19% in 2022 and 17% in the year 2023. The IMF says central banks must act resolutely to bring inflation back to its target bracket. IMF also calls for clear policy decision to tackle inflation in Nigeria. I have my guest with me. You've met him previously in the studio. He's Professor Uche Uwaleke, Professor of Finance and Capital Market, and also the President, Capital Market Academics of Nigeria. Thank you for joining us on the program, Prof.
Thank you, Christy.
Also, we are expecting to be joined by Dr. Odin Muhammad. He's a member, Daily Trust Board of Economists. He's joining us live from the annual meetings, of course, in Washington. He has been part of the IMF World Bank annual meeting in Washington. Thank you for joining us, Doctor.
Thank you very much and good morning.
Thank you. Now, Prof, I'll begin with you in the studio here before I go over to Doctor. I want you to speak to these projections we have seen. There's a lot of downgrade happening, a lot of downgrade happening, not just with Nigeria, even with the World Economic Outlook, with outlook of other countries that are perceived to be doing better than Nigeria. Speak to me. Let me know your thoughts on all of this.
Yes, it's not surprising that the IMF and the World Bank, revising their growth forecast downwards. And that's on the back of, as you know, the spin-off effect of the Russian-Ukraine war, which is, dominating discussions at the moment at the ongoing annual meetings of the World Bank and IMF. So it is the fallout of that war that has led to rise in food prices, that has led to rise in energy costs, and that's why you find inflation rates now in many countries, elevated at unprecedented levels, whether you're talking about the US or the Eurozone. So inflation rate has been high. And coupled with that is also the lingering effect of COVID, which is also part of why the Chinese economy is slowing down. In China, as you know, some parts are still experiencing lockdowns. So Chinese economy is slowing, and this is the number 2 economy in the world in terms of size and number 1 in terms of trade. Then you have, on the other hand, you have the Russian-Ukraine war that has also triggered a lot of supply chain disruptions. So these major factors are what the stakeholders who are currently discussing, particularly the IMF and World Bank, these are what they have taken into consideration to say they don't see the world economic growth firming up next year, or even for the rest of the year, which is why they have downgraded for sub-Saharan Africa, for example. You mentioned it, to 3.6%, and that of Nigeria specifically to 3.2%. in July, when they came up with June, July, when they made their most recent projection before this time, it was 3.4. So they have downgraded from 3.4 to 3.2. That's talking about economic growth for Nigeria. And these projections are also informed by the fact that across the world, particularly in emerging economies, these economies are experiencing widening fiscal imbalance, or what they call, tighter financial conditions. A lot of them are now exposed to huge, both private sector and public sector debt. So public debt is growing, fiscal deficit is growing. So against that backdrop, they also see all that as a constraint to growth, which is why, some of the recommendations by them is that with respect to inflation, for example, which has become a major headwind for the global economy, that central banks should rise to the occasion, should because that's the primary mandate of central banks. And for me, what I understand that meaning is that central banks should tighten monetary policy, to be able to rein in inflation. Well, of course, that also has its own consequences.
Yes.
And which is also why the IMF thinks that if central banks do that, output will be affected,
yes,
and growth rates will of course decline.
Okay.
So the projections they have made,
yes,
are in line with this, global developments.
I want to bring in Dr. Odin Muhammad now into the discussion. Now, Doctor, I know you have been following these developments, especially from Washington there, the annual meeting. You are at the annual meeting. I want you to calibrate for me the mood of world leaders that are present there, because we are receiving these projections and we want to understand what are some of the factors that have been brought to the table to culminate to this.
Okay, thank you very much, Christiana. I think Prof has set the right tone to the discussions. Basically, the thinking of the two Bretton Woods institutions came up with their two reports. Basically, the IMF report, they titled it World Economic Outlook Countering the Cost of Living Crisis. Mark the word cost of living crisis. And the second report is the Global Financial Stability Report, and they titled it Navigating the High Inflation Environment. Basically, the concern of the world generally now is since the 2008-2009 world financial crisis, the world has never seen this kind of a headwind, in the sense that in most countries you find slow and you see inflation going up, trending up, abnormally. In Eurozone, it has gone up to over 8%. Just yesterday, we received a report of 8.5% for the US. In the UK, is very close to 10%. Now, the thinking of the advanced economies basically may not be something palatable to emerging and developing countries like Nigeria. For example, the suggestion they made basically are three. Number one, since 2008-2009 financial crisis, there have been some kind of accommodative monetary policy where interest rate has been going down, has reduced. In countries like Japan, interest rate was even negative, almost zero in the Eurozone and so on. So now with they're suggesting central banks across the world should focus on their core mandate of financial system stability. That is to ensure that they rein in on inflation. And the only way you can rein on inflation, you can see the differential between the interest rate and inflation rate. Anything in between is what is called negative interest rate. So the target is to continue to be aggressive, hawkish in terms of monetary policy stance, raising rates to attack inflation. And in developing countries, the suggestion given by the two Bretton Woods institutions basically is tight monetary policy. And then on the fiscal side, it suggests there should be measures in that report towards alleviating the cost of living crisis. Now, in developed countries, they can have the capacity to address that end. In countries, developing countries that are already in huge debt crisis, if I can use the word, it may be difficult because they're already in a fiscal crisis. They may not be able to have that kind of a fiscal buffer to be able to, address the concern in terms of palliatives to their citizens. And then they also suggested issues relating to improving productivity, so that including supply chains and so on, so that growth can be enhanced. Now the question is, these measures, to my mind, it's open to debate. To my mind, it will work in developed countries. But to my mind, it can work in the process of dealing with inflation, adopting the hawkish stand. Yes, there is a negative interest rate when you have interest rate lower than inflation rate. Yes, there is that is the core mandate of the central bank. But there must be some kind of harmony with the fiscal authorities, to ensure that the fragile growth that we have is not challenged. Because if that measures continue to go on, the cost of borrowing will go up. If cost of borrowing goes up, there may be challenges with those small businesses, sustaining themselves. And if they don't sustain themselves, we will have a crisis because some of them might fold up, which means the further accentuation of the unemployment crisis. And by extension, we may also have what we don't want, what nobody wants, because once there is a social crisis, there may be insecurity, and so on. So my own argument is the submission by the IMF at the present meetings will work aptly, eventually, for developed countries. It will work, but it might not work for developing countries unless this issue of debt is addressed. Unless, number one, there may be some kind of restructuring of our debts to allow some fiscal buffer for countries like Nigeria, or in addition to that, or debt outright debt cancellation, which might not be really feasible, but some kind of measures need to be put in place. But those countries, by the IMF need to. Yesterday I heard that the IMF are saying that they want to have a bilateral discussion with Nigerian government as to issues of sustainability, debt sustainability, which is a very important thing, because if the Central Bank of Nigeria work independently, working towards ensuring their core mandate of financial system stability, they are doing the right thing.
Doctor, I want to hold
but
you
in
on
the
that.
process,
I want to hold you on
one
that.
problem can be addressed and a new problem might emerge. So there must be some kind of synchronization, and that synchronization can only be possible even if the fiscal authorities want it. There must be a fiscal buffer. There must be the money must be available to be able to balance the situation.
Dr. Richland, thank you for laying that background for debt, because I was watching the IMF seminar. They had the MD of the IMF, Kristalina Georgieva, had the former head of the ECB, and they were talking about debt, and the finance minister was also part of that IMF seminar that was held yesterday. Now, I want you to speak around this issue of debt. He has given us a background talking about the fact that some of these projections or some of these recommendations might not work for emerging markets, emerging economies like Nigeria. The CBN has largely stayed hawkish for some time now. Doctor, I want you to speak about how issues around Nigeria's debt obligation and meeting those obligations, because the finance minister said on that panel yesterday, she reiterated that Nigeria is going to meet its debt obligation.
I think I don't think that the country is at risk. In terms of meeting debt obligations. We have not had any record of default. If you also look at the 2022 budget performance so far, you will see that the government has consistently met these debt service obligations. And for 2023, the government is budgeting 6.3 trillion, by way of debt service. But again, that is where the challenge is. The challenge is in our ability to service these debts, not in terms of debt to GDP, because in terms of debt to GDP, we understand that we are within threshold. We are within even our self-imposed limit of 40%.
I've just been informed that we are running out of time, so Doctor, I want you to just land on that thought so that we'll get you.
Okay, yeah, the point is, I think we'll go by the IMF recommendation that the solution for now would appear to be restructuring. IMF is recommending that we'll see how we can restructure. But of course, because of the structure, composition of our debt, there's a limit to which you can restructure. You can't restructure Eurobonds.
Yes.
Eurobonds are commercial debts, and those bonds, those debts, constitute up to 40%, of the external debt. But you can only restructure the multilateral, and to some extent the bilateral. But again, our ability to restructure the bilateral also is also a function of what is happening in China. As I mentioned earlier, China's economic growth is slowing, and China may not be, disposed to doing that, at this moment.
Dr. Richland, I want to get your final thoughts in 30 seconds. As the meeting wrap up in Washington, what's the key takeaway for you, especially for Nigeria's economy? Quickly, sir.
I think the key takeaway for Nigeria is we need to look inwards critically in terms of issues relating to debt sustainability. Frog was talking about the 2022 budget and 2023 budget. If you look at the 2023 budget without doing any macroeconomic econometric modeling, you can see that there is something that needs to be improved upon as far as the arithmetic is concerned. When you have a budget of 20 trillion and you are borrowing about 9 trillion and you are using 6.3 trillion to service debt, you are using 5.3 trillion for capital expenditure. The remaining part is for recurrent and so on. I think there is something to do with arithmetic, because when you find we are in a situation where you are in debt sustainability crisis. Yes, we have never defaulted, and God willing, we will never default. But we need to restructure our debt to be in tune with our debt to revenue. We need to enhance our local revenue to have the capacity to repay our debt optimally. Thank you.
Odin Muhammad there talking to us, member Daily Trust Board of Economy, speaking to us from Washington, D.C. And I also have Professor Uche Waleke here, Professor of Finance and Capital Market, President, Capital Market Academics in Nigeria. Thank you, Prof, for always obliging us to come and speak towards the betterment of the Nigerian economy. That's what we call it a wrap for the program today. Thank you for investing your time with us on the program. Remember, you can catch up on all the updates on Trust TV social media platforms. I am Christiana Amodu Otinya. Enjoy the rest of your day.